What I think is really interesting, you just mentioned, all right, so if you think about the last 3 years, we've seen huge bubbles, kind of inflate and burst. And it was SPACs, it was unprofitable tech companies, recent IPOs, crypto, NFT, metaverse, right? Buy now, pay later. I mean, the list, like, fintech stuff. I mean, the list goes on and on and on. And in many ways, you could say the market cap of all these dwarfs what happened in the bear market that followed, right? The dot-com implosion. So I think about one right now where it's really being played out among Microsoft, which is a $2 trillion market cap company, Alphabet, which is a 1.5 or so trillion-dollar market cap company, Nvidia, which is a $700 billion market cap company. Those are like, this is the battleground for these large language models, for the capex that's coming after it, right? For the hopes and dreams of the next 5 to 10 years. And this is encapsulating a lot of what you and I have spent the last 20 minutes here talking about. So when I look at them, and we're going to definitely do Apple, but I look at a Microsoft at 30 times getting kind of expensive. When you think about the likelihood of them gaining any meaningful share with Bing, to me, I'd be a seller of that right now, okay? Integrating these large language models into their productivity tools and some of their other cloud offerings, I'm all for it, but I just don't know how we can quantify that right now and what sort of multiple we're going to put on that. And then when you think about Alphabet and the volatility that we saw around, focused on Google and Bard, who knows, man? I'll continue to bet on their search dominance and everything like that. They were established themselves as an AI first company 6 or 7 years ago, and I'll bet there's some tricks up Sundar's sleeve there. Okay, but the one that sticks out like a sore thumb on a day like yesterday, this was Monday, May 1st. Okay, when the Nasdaq looked like it wanted to take a pause, financials like made us feel like we are in another bit of a financial crisis that is not contained. Nvidia, they were piling into because there was a blog post on their website that they are shipping some of these advanced chips that these companies are supposedly going to gobble up, and it was up 4%. And to me, at 23 times sales and 66 times earnings for a $700 billion market cap company, it makes no sense. This bubble will pop very similar to the way the Tesla bubble popped in the last year or so. So I led you with that one. Push back if you think I'm just, like talking my book or whatever. But as long as I've been doing these business in this business for 25 years, all of these bubbles in the near term, to Bill Gates, the quote that you just gave, it's just overhyped, man. And something's going to break really soon in this one, in my opinion.
I 100% agree with you. The analogy I give is this, and I post on my Twitter handle at Daniel T. Niles, and a lot of them I try to end with risk to reward. And so I always say there's a difference between making the right decision and getting the right outcome. And so the example I give is if I tossed $1 million gold coin at the bottom of a pool and it's full of man-eating sharks, and you jump in and you get the coin and you get out safely, that's a great outcome. It was a horrible decision, right? And people can confuse those two all the time. So to your point on NVIDIA, and we actually put out a tweet on this and said we sold NVIDIA. And we had owned it, and I've been on CNBC saying, yeah, we liked NVIDIA, we liked Intel, but at a certain point, you go, what if they come out and they say, yeah, gaming PC demand isn't quite as good as we thought, and data center, by the way, look at Arista today. We haven't talked about that, but they were supposed to do well because Meta and Google, two of their biggest their two biggest customers, they reported results. Obviously, we know what the results were; they were good. And so Arista was supposed to do great. But guess what? They're cutting back on some spending on some other stuff, and Arista's getting beat up. I think it was down 15% or so when I saw it last. And, it had a very high valuation. And so with NVIDIA, what I've done is I actually bought Intel recently. And we can get into that. But unlike the stats you quoted on NVIDIA, you look at Intel and you go, this is probably one of the most hated companies in all of big cap tech. Right? Because they've lost market share for 5 years, et cetera. But you look at the quarter and you go, wow, it crushed the revenues. The forward revenues went up. It's probably the first time in 2 years that's happened. Now you get to valuation, you go, it's trading at like 1.3, 1.4 times book. Now to put it in perspective, Micron Technology, which is a commodity memory manufacturer that has negative gross margins, not operating, gross margins, is trading at a higher valuation than Intel. And Intel's market share, I think, is starting to stabilize. And so I go, and now remember, I'm a hedge fund. So for me, I can hedge that because I'm short a whole bunch of cloud related companies. So companies that have the same sort of business model or rely on consumption like an Amazon Web Services, right? Because if you go through that Amazon quarter, right, retail did great, margins in retail were great. The stock just got clobbered, went from being up 10, 12% in the aftermarket to down 2 to 3% when they said Azure, which is, or not Azure, AWS, went from 16% growth in the prior quarter to now it was tracking at 11% in the month of April, and the stock got pummeled. Well, there's a lot of software companies like Nvidia that are still trading at high 50 to 100 times earnings. But I go, their numbers are going to have to come down, and they're not going to have a retail business with expanding margins to offset it. So you're going to need more powerful microprocessors for this stuff, and everybody hates Intel. And I go, you know what? I'm pretty good at semis, I think. That's a name, I think, with PC demand down 30% year over year, that it's pretty close to bottoming. That's a good risk versus reward, which is what you're bringing up with that multiple for NVIDIA, which is up here. If anything goes wrong, like with Arista, which we're seeing today, or Chegg, right? You pick it, whatever. And there was some talk about, AI will be good for Chegg because they can incorporate that into their learning. It doesn't look so good for Chegg today. So I think you're 100% right. You got to pay attention to valuation.